In today's Eye on Emerging Markets, we take a look at the impact of rising oil prices on Latin America. Who will be the winners and the losers? Kathryn Rooney Vera joins us now to help us sort it all out. She's the senior macro economist at Bulltick Capital Markets, a boutique investment bank based in Florida. And Kathryn, I apologize, you had to leave lovely Miami weather for this New York, a little bit crazy weather. But let's talk about oil prices today. You know, we enjoy having you here in the studio, particularly on a day when we are seeing another uptick. I'm looking at WTI crude at the moment, up $2 on the day, trading at around 106.30 at the moment. This is having a very divisive impact in terms of the prospects of certain Latin American countries versus others.
Of course, there's a disparity between countries. Net oil exporters like Venezuela, Mexico, Colombia, these countries benefit hugely from an increase in oil prices. But then you have the economies that are net oil importers like Peru, Chile, Central America, and the Caribbean. That region primarily are the biggest losers because they're net importers of both food and energy, and they're not commodity exporters. So
let's take a step back for just a moment. You have sort of a middle of the road forecast which says that oil will stay around $100. Yeah. Under what circumstances do we see that happening?
Well, we see oil at 100 given the current circumstances, some ongoing turmoil in the Middle East, but not a blow up in a principal oil exporter such as Saudi Arabia. In that case, we see oil prices really going through the roof. Above 140 on a sustained scenario, 2 or 3 months on WTI would implicate for us entrance in a double-dip recession on a global scale. Now, that's not our base case scenario. Our base case is that we stay around 100 WTI on average through year-end.
We were talking about sort of the middle-of-the-road scenario for oil and what would have to take it to $140 and $150. But I do want to ask you, we've seen about 3%, and I was reading your research report, we've seen about 3% of total world oil production actually impacted by the events over the last few months. Yet we've seen a 16.5% rise in oil prices. How do you reconcile those two?
Yeah, that tells you that really what's driving a lot of this huge jump in oil prices is fear. What's going to happen in the Middle East? So if you see another eruption in terms of Saudi Arabia or something like that, you can expect with 3% already in play from Libya, if there's 15% of oil production now at risk, you can expect an even bigger jump in oil prices.
Well, let's talk about now the winners and the losers. You touched on them briefly right at the top there, but let's go a little bit more in depth. Who benefits most in this sort of rising oil price scenario?
Well, the biggest oil exporter is obviously Venezuela. So Venezuela definitely gets a boon from any type of jump in oil prices. Inflation is high, and we already know that the government's reporting probably 24% year over year. It's most likely verging on 35 to 40% inflation. And you have the Chavez factor. The Chavez factor is a premium in bonds.
Talk about volatile.
Very, very much so. It complicates the story immensely. But that's why you have bonds yielding 15% in 10-year sovereign, 17% in PDVSA. In my view, this is a good short-term play for investors who have some element of risk appetite, because with oil prices really rising, you can see a tightening in spreads.
That's a highly leveraged play to oil.
It's a high beta name.
Let's talk a little bit about Brazil. Now, you put this in the category of sort of straddling the fence.
Yes.
Not quite a winner, not quite a loser. And as far as Brazil is concerned, it's not clear if they're a net importer or net exporter necessarily of oil.
They became a net exporter in 2009, but then reversed course and became a net oil importer in 2010. That's because of increase in consumption, production not offsetting consumption. So I think that the trend is going to go back to net oil export precisely because of the pre-salt region. There's an immense amount of oil. It's estimated at 123 billion barrels of reserves in the pre-salt, below the salt level in Brazil, and that's going to come online in a couple of years. So I think in the medium term, Brazil is certainly going to be a major oil exporter. And just to put it in a frame of reference, proved reserves in Venezuela is about 172 billion barrels.
All right, and very quickly, let's go through the losers here. We're talking about Central American countries, the Caribbean. Peru,
yeah,
Chile.
Caribbean, for example, these are names that will truly suffer from higher oil price environment. Their economies are tremendously tourism based, so when you have a jump in oil prices, then discretionary spending comes down and tourism is adversely affected. Also, they're not commodity exporters, so when you have higher oil prices and other commodities are also rallying, for example, Peru and Chile benefit because they have commodity exports, but Caribbean and Central America really don't. They're net oil and food importers. So
all right, all of the downside and none of the upside that we see in some of these other countries. Kathryn, thank you so much, as always, for joining us. Appreciate your insight.